Beijing has rolled out a series of measures to shore up China's economy as U.S. President Donald Trump's tariff blitz threatens to spill over to financial systems worldwide. Here to help unpack what they are is Post Managing Editor Eugene Tang. Hi, Eugene. So tell us, what are the measures unveiled by mainland Chinese regulators today?
So it's a series of tactical moves to build resilience in the Chinese economy. Now, first of all, we have to understand that this is happening just days before the Chinese Vice Premier heads towards Switzerland to hold the first talks with US officials since this trade war has begun. So today there was a press conference in Beijing, and arguably three of the most powerful people in China's capital markets, the regulator, the stocks regulator, and the central bank governor got together and unveiled a series of measures. On one hand, they freed up a lot of capital. They cut a key interest rate, and they reduced the amount of money that all the commercial banks have to keep with the central bank by 50 basis points. Together, that freed up about 1 trillion yuan worth of capital into the economy. But it's not just a case of throwing money helter-skelter into the economy. They were also very tactical in selecting key sectors of the economy that they needed to show up. For example, lending towards technological innovation companies, money towards small businesses, money towards aged and more vulnerable parts of the society. They also allowed insurance companies to reinvest the money into the stock market. They also allow banks to open up investment arms to invest in tech companies. So if private equity and venture capital was not funding innovation, it would be hoped that banks will be able to do some or pick up some of that slack. So across the board, it was a fairly broad-based tactical combination of monetary easing, pouring money into the economy, but also shoring up various aspects of the economy to build that resilience.
So you already mentioned that the different sectors is pretty spread out widely, but which sectors do you think would be most stand to benefit the most from these measures?
Well, the key part of this series of measures is really to shore up the Chinese economy and to shield the economy from any negative impact due to that tariff war, right? There's a concern that exporters will be hard hit by the tariff war. So the government needed to protect the various parts of the economy that was very dependent on the exports part of the export sector. People will also needed some encouragement to spend, to continue to shore up consumption. Now, one of the biggest problems with consumption in the Chinese economy has been the property slump. The slump in the property market has reduced the willingness and the appetite by a lot of households to spend. Obviously, if you're a major part of your net worth of your household saving is locked up in real estate, and if that is reduced in value, obviously your appetite to spend has been reduced. So the government has really continued to stabilize the property market. This is a continuation of policies that were announced several months ago. So shore that up, improve various aspects of the economy, including the technological sector, car financing, for example, to encourage people to spend.
Right, so domestic consumption as well has been addressed. Can you explain some of this move they mentioned to so-called create conditions for foreign listed firms to return to domestic stock markets as well as Hong Kong? Why is this being done?
Sure. There are a little bit over 200 plus Chinese companies that are listed in the US on NASDAQ and on the New York Stock Exchange. Now, there's been talk over the past 18 months or so by various people in the US to expel or exclude or force these companies to delist from the US. This will lead to obviously a huge sell down of Chinese equities in the US. Now, what the Chinese authorities are doing is really a case of planning for the worst and hoping for the best, hoping that some of these will not come to pass, some of these talk will not come to pass. But if it does turn into policy, at least provide a place, a home for a lot of these companies to continue to raise capital. Now, a lot of these companies, some of these companies already have dual listing in Hong Kong, for example, Alibaba, Trip.com, but some of these companies are only listed in the US, Pinduoduo, for example. So, that basically is a way to encourage these companies to come and either raise capital in Hong Kong or in the domestic market. Now, that is very interesting because the very reason that a lot of these companies, starting from 20 years ago, went to list in the US was because the domestic market in China was not conducive, did not allow them to raise capital. Mm-hmm. Over 20 years, obviously, the policies have changed. And if the Chinese government is serious about welcoming some of these companies to raise capital back in China, that would be a game changer, because these are Chinese companies that earn a lot of their income from consumers in China, but they raise capital elsewhere. And if that external market were to become hostile, it would affect their valuation, would affect their ability to raise additional capital. So listing in a market that is closer to home, closer to where they earn most of their income, would be a better deal for them. Better deal for them in terms of raising capital, better deal for investors in terms of being able to enjoy the fruits of capital gains from these companies. And obviously better for the markets concerned, whether it's Hong Kong or back on mainland China.
So how will this help Hong Kong, the Hong Kong market?
Well, immediately it would help Hong Kong in terms of more IPO activities. We already know that more than 100 companies are in the pipeline waiting to launch the IPOs. Just this month, I think CATL, the world's largest maker of EV batteries, is about to embark on a capital raising exercise in Hong Kong. Talk is estimated up to $5 billion US. And with these policy that's announced today, hopefully there will be more of these US listed Chinese companies that will think about raising additional capital in Hong Kong. That would mean a stronger IPO pipeline for Hong Kong, help Hong Kong reclaim maybe its spot as the world's favorite fundraising hub.
So with all these challenges, possibly come up opportunities then. We'll leave it at that. For details of China's latest fiscal policy package, visit our website, scmp.com.